Since 1914, we are men of vision, men of service, men of culture, men of leadership. Phi Beta Sigma Fraternity, Incorporated.
In my soul, Lord, feel it in my soul. Phi Beta Sigma God soul. Phi Beta Sigma God soul. Said Phi Beta Sigma God soul. Phi Beta Sigma God soul.
Welcome to Operation Hope, an organization dedicated to promoting financial dignity through financial literacy and empowerment, helping turn renters into buyers and the disqualified into homeowners, molding entrepreneurial ideas and aspirations into viable small businesses, inspiring young people to take hold of their futures and make their dreams come true, promoting financial wellness in the workplace, helping to bring financial wholeness and peace of mind, standing with survivors, helping them restore dignity and rebuild their lives after a disaster. We are Operation Hope, working together to create a brighter financial future for us all. Join us as we continue to transform lives through financial dignity in the 21st century.
Good evening. My name is Brother Dr. Antonio Williams with the Phi Beta Sigma. I'm the Director of Bigger and Better Business. I'd like to welcome you tonight to our training with Operation Hope. We hope that you'll learn something good tonight. We have Isabel Duran, who's a financial well-being coach with Operation Hope. She's been with them around 7 years, and she's going to take it away from here. So enjoy our training. On behalf of our president, Brother Dr. Rice, and the Bigger and Better Business Committee, we welcome you tonight. Thank you. Isabel, can you hear it? Are you there? We might be having a little interference with the communication. 1 second. Can you hear me, Isabel? Yeah.
I hear you.
There we go. You can go ahead and take it away.
Okay, thank you very much. Thank you for coming to the First Time Homebuyer workshop. I am Isabel Duran. I am a HUD certified instructor. And we're going to give you an overview of homebuyer education so you can understand the steps that you will need, in order to have a successful homebuyer experience. First of all, I'd like to just say Operation Hope has several programs that we concentrate on, which is credit and money management, which is one thing that I do, as well as the education for home buyer. I try to help people understand their credit so they can prepare to be ready to talk to the lender and get approved. We also have a small business training, entrepreneurial training program. We have some really awesome new programs that are assisting new small business entrepreneurs. We also help you with financing your business. And then we have the home ownership program where we help you understand, prepare your mindset, and reach your goals. Um, so, what we're going to talk about is assessing homeownership. In other words, thinking about buying a house, we need to talk about what is your goal. What are your needs? Do you need to move right away? Or is this a plan that's a year or 2 years away from now? What you want to do is do some homework, prepare yourself, or is there some other thing that you're looking for in home ownership? Um, we're going to talk about the types of mortgages. I have a wonderful lender on that will be talking after me, and they will she will explain the types of loans, what she needs to complete your application, and and what to do in case there's some contingencies or some conditions that we need to help you with. And once we complete the loan part, we're going to talk about the approval letter that you will need to have in order to find out how much of a house you can afford. And that way you can talk to a real estate agent or broker and have them find the house that you want that you can afford. So one of the things I always like to start with is that you're not alone in the home buying process. I always like to tell people that you create your winning team, which includes the lender, the real estate agent, the appraiser, the home inspector. And if you want, I can be your head counselor to help with information. So we're gonna talk about.
Hey, Isabel, I think
I'm on homeownership advantages.
you might be having an
Okay, so we like to compare. I'm sorry. Someone say something.
Yes, ma'am. Sorry about the
No,
issue.
okay.
I think we were trying to introduce the slides and it was creating some type of echo. So please continue, and I believe we'll pick up with the slides when we can. So please continue.
Continue.
Yes, ma'am.
Okay, so I like to talk about the pros and cons about home buying. We compare it with rentals. So one of the things that we always get excited about when we talk about home ownership, looking for a home, is that it's one of the best investments you can make with your money. So owning a home is your first step to investing. Investing in yourself, and the mortgage payment that you will be making is not only a payment that will pay down your debt, your mortgage debt, but it also builds a value, because eventually you're going to have the difference between the value of your house and the loan will be your equity value that you own, which is really exciting. It also helps you that having a mortgage will give you some tax write-offs. It's considered a long-term investment program. As one person asked me, what's a good debt and what's a bad debt? Mortgage is a good debt because it's really paying you back at the end. It also gives you stable housing costs, um, creates wealth, legacy, and value.
Literacy and empowerment, helping
Okay,
turn renters into buyers.
homeownership. Happy person there in front because it's hers. However, owning a home has some responsibilities. You need to understand that you're not going to be calling the landlord to help you fix your house. You're going to be the landlord, so you call yourself and try to fix the house, the plumbing, the electricity, the doorknobs, the locks. Actually, you're going to create another team member with your winning team. You're going to have to find a plumber, a carpenter, an electrician, handyman, someone that can help you fix little things here and there, or some things that you can't even reach up there. Um, then repairs and maintenance. You're going to have property taxes, and it hurts to think about another bill on your mortgage. But I always tell people, think about the property taxes you're going to pay. That's going to go towards fixing the streets. Uh, Property taxes helps pay public schools, teachers, emergency employees, the firemen, those kinds of things. And you want to have a nice neighborhood that's taken care of. And then, of course, the value can go up and can go down, but that's part of the investments. But in the long run, if you live there for at least 10 years, you're going to see your equity grow and you can do things with that. You wait 20 years, it's even higher equity that you're going to have. And you're going to feel very important and very relaxed that you have a home after 20 years. Um,
Hey,
so one of the things that you have to do is prepare to think about applying for a loan and looking at your budget. So we do go over your income and your expenses, your style of living, and figure out with the mortgage payment, will you be able to handle a mortgage payment instead of the rent? Think about the utilities that you're going to have to pay that might be higher than what you're paying now, um, and also the repairs that may come in, or no repairs. So we go over some scenarios of expenses, and we try to help you handle your living expenses with your income. And then we take a look at your credit to see if it's up to par, because we want you to have a really good chance to get a good rate with interest on the mortgage. And the higher the score, the better options you can get. So I help people understand how the scoring.
Did we lose her?
I think we did. We might be having some technical difficulties. Rosa, this might be
Sure.
an opportunity to step in. Rosa,
Definitely.
and I'll go ahead and introduce it. We have Rosa Amaya here. She worked 16 years with Operation Hope, and now she has 9 years experience in the lending industry. So I just want to take the opportunity to say the viewers on YouTube and Facebook, feel free to leave your questions directly in the comment section. And we have Isabel back. So um, are you there? Welcome back.
Thank you. Where was I?
That's not the mouse. You can please continue.
Okay. So I was talking about credit. Is that why it went off? People got scared?
I think so. It always triggers.
Okay. Okay. Well, I can give you strategies and secrets of how to improve your credit score fast in order to rise or raise your credit score, because you really want to be at 700 points credit score, because then it's very hard to deny you. But I want to help you with that. There's some strategies you need to understand. Many times people enter into credit with either credit cards or loans, and they don't understand how the scoring is applied. So I can explain that to you in order for you to be able to talk to Rosa. Am I still on?
Yes.
Yes, we can hear you just fine.
I appreciate that. So, one of the things that you have to remember in your credit history is paying on time. That means you have to pay on the due date of your loan or your credit card. If you don't pay on the due date, the creditor will charge you a late fee, and that's just extra money that goes out the door instead of helping you with your budget. The other thing that FICO doesn't tell you is that you have to pay within 30 days. If you're late, you're going to pay a late fee. But if you're late 30 days, the FICO will come in and take points off your score and will mark your credit report with the history of a 30-day late. And that stays on your credit report for 7 years. We really want to avoid that. That's not what you want. And so if you can just be cautious about due dates, that will help you. The other thing is credit cards. You want to make sure you keep your credit limit open and increase it, so that way the proportion of a high credit limit and a low balance really helps your score shoot up to 700 or 800. I helped a lady with 3 credit cards. She had a high credit limit on each one, 5,000, 6,000, 7,000, and her balance was only 200. Her score was 800 points. So I know you can do it. It's just a matter of paying down your debt, saving money, and waiting until you have your home and you don't have any problems. Then you can use other credit cards. But it's really a matter of understanding the scoring system to improve your score. That way, when Rosa looks at your credit report, she doesn't have to, say, I'm sorry. We need a little more time, but she can help you. So next is Rosa. Rosa, can you take over?
Sure, definitely.
Okay, I already got someone already excited. They have a good credit score. How can we help her?
So the first step, once they know what their budget is and they know their credit score and they're ready, we're gonna go ahead and collect documentation. We're gonna talk about the different loan programs that are available as far as a conventional loan. We're gonna talk about maybe a government loan, and we will go ahead and discuss what are gonna be your payments. So there's different types of loans available, but the most important part will be what can you afford? We had a question on our chat that asked, how much more can I pay on my mortgage? It's all based on rules and regulations and guidelines that we follow to make sure that the payment is affordable to you. So, right, what we're looking at, we want to make sure that you're going to be able to pay an affordable principal, interest, taxes, and insurance. So that mortgage payment will go ahead and let us know how much we're going to use of your income. So based on the guidelines, the program allows us to use only 45 up to 45% of your income to pay a mortgage. So maybe right now you're paying 1,600 a month. $1,800, $2,100. But the rule of thumb is making sure that we don't go over 45% of your income to pay your mortgage. Why? Because the rest of the payments are going to have to be covered also from your gross income. So if we start using higher numbers, it's a little bit more struggle for you to be able to afford. So what you would do is take your gross income and multiply that times 45%, and that's going to tell us how much of a mortgage payment it can be. Now, one thing that I like to tell individuals is that we are doing your pre approval based on your gross, on your take home. I'm sorry, on your gross before your take home. So, everyone here takes gross or net? I'm going to put my hand down because even for myself who works for a bank and have different scenarios going on as far as my income, I take a net home, okay, after deductions. So we have to consider the gross for your mortgage payment, but we also have to consider, do I feel comfortable with this monthly payment based on my take home? It may be you have higher deductions. You have a retirement account that you're putting money aside. You have a medical account that you're also saving money towards. You have different sources where you're splitting your money into. So you may have to do some cutbacks on those to be able to have a little bit more accessible funds after the deductions. So very important to consider what's comfortable for you within your budget. So a lot of times we say, well, I pay 2,200 or pay 2,500. But once we add all the numbers together, is this an actual affordable amount? Paper is what tells us exactly how much you qualify for. Once we look at the pay stubs and the tax returns, we're able to review all that and based on the loan program that we're using. Next slide. So qualifying for the mortgage, the bank is going to review, yes, your credit. We want to see how's your credit scores. Programs vary as far as credit requirements. So some banks may require a 580 credit score based on a government financing product. Some programs may require a 620. Depending on the loan program, it may be a little bit higher. But one thing that right now that we have to keep in mind is based on how the interest rates are doing in the market, the better your credit score, the better the interest rate you're going to obtain. So you want to aim at being over 720 if possible, because on the credit report, the range goes from 300 to 850 when we look at the credit scores. We're going to look at the FICO. When the bank runs the credit report, we run what's called a um, mortgage credit report. It gives us a little bit more details. There's consumer credit report. There's some auto loans, the way the credit report is set up, auto loan credit report, and then there's ours. We want to make sure that the residential mortgage credit report gives us all the information. So the banks are going to use the middle score, and we're going to look at everything. We're going to look at if you have late payments, if you have bankruptcies, judgments, collections, the outstanding debts that you have, how many inquiries you've had in the last 2 years, because that may impact, or within the last 30 to 60 days, that's going to impact how much debt you have. So it's very important to look at your credit at least 2-3 times a year. There's annual credit report that could where you could review your credit. So it's very important to keep an eye on it so that when you come to us, like Isabel mentioned, that we're able to say, yes, we're ready to move with an approval and not say there's some time that we need to be able to overcome some challenges. I don't like to say issues. I don't like to give denials, but it's very important to help you get through the process as best as possible with as little roller coaster loops as we can avoid. Next. And so one of the other things that the bank is going to review are going to be, so we looked at the credit, we're good on that. We're moving on to the next one. We're going to review your employment, your income. How is your income? Is this income a full-time, part-time, overtime incomes? What is all the sources of income that you're receiving? Do you have commission? Are you self-employed individual? Are you a salary employee? Is there any seasonal income coming in as well? And all of this income has to be sourced for 2 years. We have to see that you have been employed for 2 years. If you have had any changes, any gaps, we need to know what happened. Give us an explanation. We need to verify that the income will be consistent as well so that you will be employed. We're going to submit a verification of employment. So it's very important for us to get your employer's information and receive from you an authorization to verify that income. If you're in a self-employed individual, we do ask for you to have had that income for at least 2 years. We must be verified. And we will also ask for what's called a profit and loss statement, a year to date showing if that income is stable. We know that COVID hit a lot of individuals, so income might have dropped, or people had to change jobs, and now they're self-employed because they found that, hey, in the industry I'm in or on the skills that I have, I could start my own business. I could go ahead and move forward. Well, we know changes have happened, so we want to see that income moving forward will be stable as well. If you receive Social Security income benefits, disability income, annuities, pension, interest, dividends, retirement benefits, alimony, child support, and separate maintenance, we want to verify that that income will continue for at least the next 2 years or 3 years, depending on the type of income that we're reviewing. We want to verify that everything has to be documented and verifiable. Debt. We're going to look at everything as far as debt. If you have student loans, if you have personal loans, car loans, any monthly payments that you have as far as installment debt, we're going to see those debts as well. In regards to student loans, I get a lot of questions in regards to my loan is in deferment. Wonderful. That's kind of a good news because you don't have a full payment. But we need to know how much will the payment be if you started a payment plan, if you started to go into a payment plan. If not, we have to use 1% of the balance that you have. So very important to know what the payment will be moving forward. In regards to revolving debt, we're going to see the credit cards that you have. What are the balances? What is the monthly payment on those? And in some cases, we may have to take into consideration the payroll deductions. Why are we looking at those payroll deductions is because you may have a 401k plan that you borrow money from and you're paying back. So that means your take home, it's a little bit less. So we're reviewing that payroll deductions to verify that. One thing why that debt is important is because based on how much debt you have, that may reduce the amount that you qualify for because you have a larger monthly payments on credit cards. We are not looking at utility bills. We are only looking at the debts that you have on your credit report. So student loans, personal loans, car loans, any fixed payments that you have that show up on the credit report. Down payment is very important to be able to show proof that you have your funds. There are many programs available that may require 3% down, 3.5%. There's some programs available for first-time buyers too that require only 1% of your own funds. So we need to see how much money you have available in a savings account to go towards your down payment. If you don't qualify for some of those down payment assistance programs, we need to verify that you have your funds to go towards the down payment and also funds towards the closing costs. Next. And here's where closing costs comes in. Individuals say, well, Rose, I heard that there's programs available. Can that be covered through those down payment assistance programs? Yes. But just in case, again, if you're over income limits for some of those programs, you have to have your own funds to cover the paperwork. People tell me, well, such and such told me that 10 years ago or 20 years ago, they didn't have to put too much money. All they put down was 1% or 3% of their own funds. That was quite a while ago. Maybe programs were available directly through the bank. Banks still have programs to assist you with your closing costs, but definitely it's based on income qualification and also area qualification for the property. One thing that's very important to know is that even if you might not have to use all that money towards the closing costs, you still have money saved. So you want to have as much money saved to show as reserves. What is going to cover under your closing costs? We're going to cover mortgage points, which means a percentage of a fee that's charged in order for you to obtain the loan, the fees for the loan processing. It's going to cover the loan application. Most banks have an application fee at the time that you open escrow or at the time of your application. It all depends. The credit report fee, that's a third party fee that we have to pay a third party to provide us the credit report. Title insurance. So we have to verify that the property is insured so that you have a clean title in case if there's any liens that show up. We need to make sure that that title insurance covers and protects you. The surveys, if there's any surveys that have to be done for the property as well, that has to be covered. And lender and attorney fees as well. So closing costs is very important part. We have to make sure that there's plenty of funds to cover because we use all these other companies to help us through the transaction. We have an escrow company, we have a title company. There's also a research that is done for the appraisal. We need to verify all the information and everybody gets paid. There are down payment assistance programs that will help you with closing costs as well. Banks offer closing cost assistance, and we'll talk about those next. So let's go on to the next.
Hey, Rosa, I think a question popped up if you wanted to take the opportunity. It was there, but I don't know. Theo, can you bring it back? There we go. Do you see it?
Yes. Where can I find about more down payment assistance programs? We're going to cover about some of the down payment assistance programs that we offer. And Isabel does a great job at her 8-hour workshops providing information about the down payment assistance program. But there's a lot. There's city assistance programs, there's county assistance programs, and different counties have different um, programs available, and also nonprofits provide down payment assistance as well. So there's different areas that we'll be able to guide you on where to go, and we'll talk about a few of them in the next few slides. So we want to explain what are points. Points are cash payments made to the lender at closing to help lower your loan rate. So when we tell you interest rates right now, let's say are 5%, and that state the loan officer tells you it's 5% at par, which means no cost to you, no points. And you're like, well, that's kind of high, Rosa. Can we lower that rate? Yes. For every point that we go down, there's a percentage that will be charged. So as the example here, in order to lower your rate by 1 point, you would be paying 1% of the loan amount. For the example, if you're buying a home for 150,000, 1 point would equal 1,500. So very important to see and have a conversation with your loan officer and say, hey, Rosa, or whomever, Mr. Lender, can you let me know if I wanted to lower my rate? How much would that cost me? Right now, we have seen rates go a little crazy compared to what we had been seeing in the past few years, but it's where the market is. So right now we're using some of those down payment assistance programs to help us buy down those rates and keep them as low as possible to make those payments affordable. Next.
Rosa,
Yes.
there's a question about vets.
Yes, for military vets, do you find that the VA loan is better option than a private lender? Well, one thing about a VA loan, which is an awesome product for our veterans who have done such a great, amazing job at defending us and serving for our country, you get no closing cost fees, and you could obtain 100% financing, which means no money out of pocket for you for the down payment, and very minimum closing costs or no closing costs at all. So depending on the lender that you're working with, those things may be avoided from you. Now, I do tell individuals, if you have some money to put down as veterans, you have your um, also veteran benefit that you could use to help you with that. Let's use it to that. That way you could get some assistance with your loan.
I know one thing for myself individually, for veterans out there that are going through this process. You this is just something I did. USAA, if you go and use their recruiters or their I forget, I'm just not saying it right, but their real estate agents, that they will actually pay you money back based upon how big the property was or how much the amount is. So there's an
Right.
extra benefit with USAA to use their real estate agents, and it's just because they're verified and that they know they're trusted. They have to go through a process to be validated. So
Right. And even with the mortgage loan officers, we have to go to a specific training to understand the process of submitting for a VA loan, because it's a little bit different than the other loans, even though we ask for the same documentation, but the submission and revision of it, it's a little bit different. So we need to be able to structure your loan correctly. And that's the VA benefit recipient. You could also get down payment assistance programs. You could get closing costs. I help a borrower through their VA loan product, and they ended up just putting down like 3,500 out of pocket for their process because they wanted to use a grant that was available, and that's what they ended up putting in just to help them with their payment and make it so. It is possible to get assistance under VA and still have 100% financing, minimum closing costs. So it's a great product available. What are the documents that we're going to require for the loan process? We're going to request 2 years tax returns. For some down payment assistance programs, we will request 3 years of tax returns. Why do we ask for 3 years of tax returns for those down payment assistance programs? Is because they want to verify that you have not owned a house in the past 3 years. That's why we ask for those 3 years. But usually for a regular loan, we just need 2 years tax returns. We need 2 years W-2s as well. Pay stubs, we're going to need 1 to 3, depending on how often you get paid. We need at least the past 30 days
hey,
of
Rosa,
pay stubs.
you
Yes.
said something that I thought was interesting. So did you say that for the taxes you look to see if they owned a home for 3 years?
If they have not owned a home for the past 3 years.
So after 3 years, does the first time home buyer thing start over? Or why is that important?
As long as you don't claim taxes or you actually do not own a house. So what happens is every some individuals have owned a house in the past, and or if you own a house right now, let's say, you would not qualify as a first time home buyer for some of the down payment assistance programs because you already own a home. And then in order for you to qualify as a first time home buyer, you have to not have owned a home in the past 3 years. So definition of first time home buyer: have not owned a property or have had any interest in a property for the past 3 years. And that's the way they verify it, with
So
those 3 years tax return.
if I sell my property and in 3 years I'm eligible again for the first time home buyer programs.
Correct. Correct. So some banks do wait only 1 year, or let's say I know of some portfolio programs, some specific loan programs from different banks that will say as long as you don't own a house by the time that you open escrow, you qualify. So it depends on the bank, it depends on the product that they offer, but the down payment assistance programs offer from the city, the county, or any nonprofit, they will require 3 years of non-ownership. Okay. All right. Bank statements, we're going to request the past 2 to 3 months of bank statements. We need to verify that you have your savings for the down payment and the closing costs in an account. We do not take mattress money, pillow money, shoebox money, whatever we want to call it that we save. And we still hear that a lot. Well, I'm not putting the money in the account. I keep it in a safe box at home. We need you to deposit that money into the account. Since 9/11, we need to verify the sources of the funds. Where is the money coming from towards your down payment? We're also going to request the last statement of any of the other types of savings that you may have, a 401k, an IRA, a CD account, or anything that you're going to use as part of assets for your transaction. We need to see the bank statements for those as well. I just had a borrower had 6 different accounts. And she moved all the money from those accounts to one in order to show that she did have her down payment funds. So very important, do not move your money until we're ready to let you know. Now you can move it. Prior to that, we don't want you moving monies around until we get to meet. So wait before you touch the funds. All right. Any questions on this portion? No? All right. Next. So once we have done your loan pre-approval, once we have looked at your documentation, and we have determined that you're eligible or that you meet the program guidelines, we will issue your loan pre-approval letter. With that loan pre-approval, it's going to state on there that you are eligible for this much amount of money, that you do meet program requirements for down payment, and that we're going to go ahead and issue that letter for you to start looking for properties. So you will meet with a realtor and start looking for properties. It's very important to have your loan pre-approval. One thing that I tell people is you don't want to go out there and start looking at properties without having your loan pre-approval, because you're going to fall in love with the house and you're going to want that home. You're not sure what you qualify for. It's like not knowing what your budget is and going out there and looking for something, and then you're going to be disappointed because now you're doing things backwards. You're coming back with an idea of, Rose, I want this $800,000 home, but when we look at the numbers, we see that the budget only allows us for 650, and then you get disappointed. But you might not have to be disappointed at all, because there's down payment assistance programs where we could submit and get you up to $140,000 in assistance, plus 22, plus additional funds from the bank. I have a file right now where the borrower is getting $169,000 in assistance. So very important. Not because you're out there shopping without a pre-approval, it doesn't mean that you might not be able to get close enough to buying that house. So
Did you say
very
100 and you said 169,000?
$169,000 in
What kind of
assistance.
program is that?
So the city of LA offers assistance program up to $140,000 in a second mortgage. So what I did was, when we ran her pre-approval, we looked at her income and she qualified for the program. She also qualified for a grant of through the Federal Reserve Bank of San Francisco, which provides up to $22,000 in assistance. So that's, remember, 140 plus 22, 162. And then Union Bank is also providing up to $9,000 in a grant to help with her closing costs. So we're a little bit up there in the numbers. So we could get you assistance there. There's possibilities. I'm not sure if after this slides we have the information for the grants and the LIPA and the MIPA program, but we'll cover those as well.
All right.
Isabel, do I give it back to you?
I was going to talk a little bit about the what the realtor does.
Okay.
Okay, if you can go back to the slides. You want to find a realtor who will take care of you when you're looking for a house, who will answer your questions, who will answer the phone. And usually with referrals, that helps out finding a good realtor. What they're going to do is they're going to have a meeting with you and find out what is it that you want, what kind of a house, how much can you afford, where do you want to live, are there any things that you want to not have around the house, like dogs next door. I'm afraid of dogs, so I always talk about dogs. So they're going to have a consultation. They're going to find out, what is it that you need and what you want, what you're looking for, how much time do you have. And the realtor and the broker and the real estate agent all took the same class to start. Uh, the real estate agent had some experience, would take another class to become a realtor, and that allows them to have their office and have agents working for them. And a broker is the one who helps with the running of the office and also is a real estate agent. So their job is to find you a house, and what they have is the multiple listing services. And now it's online, and they will send you a couple of pictures of houses that are close to the description you gave them in the location. If there's any houses available and within that price, they will send you pictures of the houses, the location. They will ask you to drive around and see if you want to take a look at them. And usually they'll give you 4 or 5 pictures of houses in the area that you're looking for. And you'll come back and say, well, look, I really like this house over here. And then on that street, I want to take a look at it. It looks interesting. And then there's a third house that it's really interesting. I want to see how good it is, how big it is. And the realtor, the agent, will call the lender and make an appointment to see when they can take a look at the house inside. Now that they can do that. I remember during the pandemic, they couldn't even go into the house. They would use video tours of the house. So so that's what they do is they take you to the house that you walk in. You want to take a look at the bedrooms, the cabinets, the floor. Is this what you want? Is this the house you want? And you take a look at several houses, and then you want to come back and talk to the realtor and find out about the price. Is there a way to negotiate a lower price? Is there something that you like about the house that you want to keep? I really like that stove. I want to keep that. Will they include that in the sale of the house, or the refrigerator, or the washer and dryer? And then you talk about putting in an offer. Okay, I want to buy this house. Can I, ask for 5,000 less? See if you can negotiate. So you talk about making an offer. You put in an offer with the other real estate agent that's helping the seller, and let's see if they'll accept it. So let's say that they do accept one offer. You make an appointment with the seller, with your realtor, and you sit down and you talk about the offer. You make an agreement. There's a contract that you will sign called the purchase agreement, and that's the beginning of escrow. So once you fill it out, you will then send it to a company called escrow, which is a neutral company that will tie the loose ends between the seller and the buyer. And the purchase agreement will become escrow instructions, and they will be in contact with you when they need to know your insurance agent, because you'll need to have a home insurance policy. They'll ask for that. And going back and forth. Around this time, you're going to be talking to your lender and tell your lender you found a house, you made an offer, it was accepted, and you sign a contract. And your lender will say, great, right, Rosa?
Yes.
Great. Let me call the company and send an appraiser, because we want to make sure the value of the house that the seller's selling for is really the value of the house. So now you have another person in your team, an appraiser who will come out, measure the house, measure the inside and out, take a look at all the pictures of your rooms, and then measure the outside of the house, the property, and then compare it to other sales that have been around in the neighborhood within 6 months, just to compare that the value is there. And we'll submit that. We do recommend that you do hire also a home inspector. Home inspector will take a look a little more deeply into the house. They'll look at the plumbing. How old is the plumbing? In what condition it is, the electricity, the roof, how old it looks. When was the last time you put a roof on the house? So they'll give you the condition of the house and let you know uh, in what condition it is, whether it needs some repair, a little bit of repair, or no repair at all. So that's an important thing, but you really don't need it for closing escrow, right, Rosa? The
Right.
home inspector? That's
Mm-mm.
optional.
That's it is something that it's you could waive, but it is suggested because by just looking at a property, you might not notice some of the things that are hidden, but the inspector will get to that. And you're able to negotiate for repairs to be completed on the property. The seller may have as is, but if it's major items, they may be willing to do the repairs.
Okay. So then we have the home inspector finished, gives the report in. The appraiser has done the report and turns in the appraisal to the lender. Looks like the value of the house is concurrent with what the sale is, and then we continue with escrow, because escrow is working with a title company. As soon as the escrow gets the instructions, they will ask the title company to do a research of the property that you're buying, just to make sure that there's no other encumbrances, no other liens, no other heirs to the property. They want to give you a clean pink slip to the house, is what I call the title. And then from there, the lender will say, pretty soon they'll say, okay, your loan is approved. We're working on the loan documents, and I'll hand it over to Rosa about that process.
Right. So during the escrow time, we're negotiating, we're talking to them, getting all the documentation up to par, making sure that everything's being done. We verify that you have home insurance. And also, if we have any down payment programs in the middle of it, we're also working with that to get you your loan approval. During your loan approval, we're going to verify everything that we discussed earlier: verification of employment. We're going to verify your tax returns, verify your down payment and your funds for the closing or down payment that you need to bring into the transaction. Once we have verified all of that, then we issue the loan documents. As Isabel mentioned, we send that over to escrow to have a notary meet you so that you could sign your loan documents. It'll be a pile this big, a little bit higher, not just kidding, but it'll be anywhere from 150 pages that you're going to review with your notary to 300, depending on what we're using together for your down payment and assistance programs that we may be working with. Once all that is signed, The escrow officer will review it, send us the documents. We will verify documents and make sure that we have all the signatures, that you have sent in your deposit, the rest of your funds if you need to bring in more money into the transaction, and balance the numbers at that time. And then wire or portion of the funds into escrow so that they could go ahead and do the final balance and make sure that now that's what's called funding of the loan. We make sure that all the funds are there, yours, ours, and any assistance that we may be going through. Once all that is done, then we have clear to close, and we will let the escrow know that they could go ahead and record title. And now everything's transferred into your name at the county recorder's office. Sometimes it can be done the same day that you sign or the next day, depending on the process that we're going through. And then the next day, once we get clarification or verification that the property has been transferred to your name, then you're able to take possession of the property, or based on the contract, it might say that you are going to take possession 3 days later or the same day, whatever stipulates on the contract. Then you become a homeowner. Yay!
That's exciting.
That's the best part that we like to see.
Yes, that's definitely the goal for the this training tonight. I really appreciate you both, Isabel and Rosa, taking the time to educate our audience on first time home buyer program. I thought the 106,000 or something like that, and or
140 and 22 and 9 and maybe an additional 10. There's money out
about
there.
60,000. So that in assistance was is amazing. LA County has some great programs apparently, and we have some experts on the resources right in front of us. So we appreciate your time and learning the in-depth process of applying and how the paperwork is reviewed. So it is appreciated, and we hope to have you back one day.
We'll be more than happy to provide more information.
Do you guys want to take the opportunity?
Antonio,
Oh, go ahead, Isabel.
I wanted to invite you and your participants to part 2 of homebuyer education. We just went through the first part. And you're going, what? There's more information? The reason why I want to invite you is to part 2 is because we do go over the down payment assistance programs that are available in, like Rosa said, the city of Los Angeles, the county, the state, different cities, and different new programs that have come out ever since we've had some issue with
potatoes. Is it part 2?
Part 2 will be on Zoom.
Okay. Is it
so
it's something we can talk about? It definitely an interesting topic. We that's right on what some of the best parts of tonight. So we can definitely consider that.
Yeah, I think it's exciting when you see more information. Then you start really thinking about, oh, I got to buy a house.
Yes.
So thank you so much, Antonio.
Oh, and 1 second, I think we have our president logging in as we speak. I think he's going to take an opportunity to speak on the some of the topics or tonight. Whenever you're ready, Dr. Theo.
Hello, everyone. On behalf of Phi Beta Sigma chapter and all of its great members, I'm sorry.
We can't see you, sir.
Oh, I can see me.
Hold on, Theo got to bring you onto the screen. I think.
Gotcha.
Here we go. Everybody's here. We're good.
All right. You see me now? All right.
Yep, we're good.
On behalf of Phi Beta Sigma chapter, the Los Angeles Sigmas, I just want to thank Isabel and Rosa for taking the time out, for providing the knowledge. We know that in life, the American dream is owning a home, and many of us are scared or don't have the information to make the first steps. and you made that step a whole lot easier. And so thank you for sharing that information. For those with us today, we hope that you learned something this evening. And if you do get a home based on this, send us some photos or invite us to your housewarming party. We'd love to be there. And we
Yeah.
appreciate this partnership with Operation Hope. The knowledge and information has helped us all tremendously. So if you all see this on replay, please send it to your family and your friends so they too can get this information. It is vital. It is vital that we become homeowners. It's vital that our wealth is passed down to next generations. And it's vital that we continue to fight the good fight and do what many people told us as people of color that we cannot achieve. And so, because of that, we're able to do more. And so, we thank John Hope Bryant and his great organization and his great work, Operation Hope, for all that they do. And if you please check our chapter out at pbschapter.org. If there's anything that you all need and want to partner with us, let us know. We will be at the Taste of Soul on October 15th. So please come on out on Crenshaw. And if you have a young male from age 8 to 18, we have a youth male mentoring program called the Sigma Betas Club. Look us up at the Los Angeles Sigmas at gmail.com. Thank you all for coming out tonight, and we appreciate everything that you all have done.
Thank you.
Y'all have a good night.
Thank you.
Good luck, everyone.
Thank you.
Yeah.